What's up, guys? It's Rob here, and today I wanted to make a video on a stock that I've been looking into for a while and actually looks very promising to me over the long term, right? Normally, I make trading videos and videos more focused on short to midterm stuff, but this is a long term investment stock that I've been looking at that seems to have incredible promise, especially now that I've been looking at it based off of a couple of statistics, and I'm going to talk about those in this video. So let's take a look, first of all, at the chart, just so that we can get an idea of what this stock is and what's been going on with it, at least in the short term, just very temporarily, right? We're going to talk about that. So the first thing to note is that this stock is SOFI. You guys have probably heard of this stock. It is a very big name in the fintech space. Now, more recently, this stock has actually been having a bit of a tough time, but is looking like it may be breaking this resistance level of $17.40. We bounced off of it in pre-market, but we may be breaking through sometime soon, especially looking at the one-year chart. You can see what's been going on with this stock. Ever since we've debuted around $1.10 when we IPO'd, this stock has been doing decently well, right? We're up about 70% since then, and we did have a massive pump up to $28 on a lot of hype for this stock. So we'll see if we can get there again, but my guess is over the long term, we will have no problem hitting that based off of what I'm going to talk about in this video. So there are a couple of things that I wanted to mention about SoFi. First of all, for those of you who don't know what they do, they're essentially an online fintech service, which means they provide student loan refinancing, mortgages, personal loans, credit cards, crypto trading and investing, and banking as well. So they do a ton of stuff. That's not even all of it, but I'm going to touch on that. I'm going to bring you to their website and show you exactly what they're doing. Right here, you can see they have a bunch of different things that you can do with them, a lot of different businesses that you can carry out with them. And they even do have crypto trading, which I know is a big deal to a lot of people. I know that a lot of people have a lot of conviction in cryptocurrency and think that it is the future of our currency, and that this alone might be a reason to invest in them, right? This is actually, analysts have said, is likely to overtake a lot of their revenue. Not that there are other sources of revenue, which are mainly mortgages that they're providing at this point, aren't expected to grow, but analysts are thinking that crypto and the trading on their platform could really overtake a lot of the revenue, in the sense that it just becomes such a large portion of it that this actually becomes one of their main businesses. Now, they are involved in a lot of stuff, as you can see, and that's actually really good. I think it's great when companies diversify, especially when they're big enough to justify it. And if you look at SoFi, they have a $13 billion market cap, which I think is the point at which you can definitely start getting into a lot of these other kinds of businesses, right? Instead of just focusing on one thing, if you were a small company, you might just have to focus on a banking app and maybe some credit cards, and that's it. But SoFi can really do it all. They do all kinds of stuff: loans, insurance, credit cards, investing, even crypto investing. So they're really doing quite a bit. And what I think is interesting about them is that they are only at a $13 billion market cap. And I'm going to make this comparison between SoFi and something like Amazon, right? Where this is a kind of new phenomenon where we are experiencing a time when these tech companies are really overtaking more traditional industries. If you actually look back at, say, Walmart, let's look at Walmart and see how they've done over the past, as long as they have a history for on the stock market, right? So this chart only goes back to 1988, and they were trading for around $3, and now they're trading for $142. And Walmart's a very traditional company. Of course, they've done very well. So they have gotten an incredible return on their investment. However, a stock like Amazon, which doesn't deal with brick and mortar places, that has mostly an online presence, has done even better. And this chart actually starts about 10 years after Walmart, right? So this only has 10 years less of growth than Walmart, which is actually just makes this all the more impressive that we've moved from $1.31 all the way to $3,400 on Amazon, a much more substantial gain than that of Walmart. Now, more recently, we've seen not just online retailers come into the space, but online financial firms. And that's what I want to talk about. This is a rapidly growing industry. You guys are all probably users of these firms yourself, whether they be Robinhood or any kind of brokerage, really, especially crypto brokerages. Traditionally, brokerages would have physical buildings where they have a bunch of workers come in, and obviously Robinhood has a headquarters. But there are typically, if you trade with TD Ameritrade, which is actually the creator of this, you will often see TD Ameritrade buildings around, and they essentially act as banks if you've ever gone into one. Where you can access your brokerage account and all that. I see them around, but that is kind of a way of the past, in my opinion. I think that a lot of people are starting to transition from needing physical locations to just mostly doing their stuff online, and that can cut down on costs a ton for these companies, right? TD Ameritrade, the maker of this charting platform, while they get a lot of their business online nowadays, is probably still paying quite a bit in either property taxes, rental fees, maybe just mortgages that they have on the buildings. They're probably paying a ton for just repairs and all that kind of stuff just associated with having these physical locations. And what I love about SoFi is that they don't have physical locations. They do it all online on their app and online on their site. And other financial institutions that are doing pretty much what they do, like Bank of America, you can actually see has a market cap of 337 billion. Wells Fargo has a market cap of 193 million, and JP Morgan has a market cap of 465 million. Now, obviously, these businesses have been around for a lot longer, right? If you look at Wells Fargo, you can see that they've been around, at least trading on this platform, since 1988. So a very long time, and they have increased in value quite a bit from around $2. Now they're trading at 47. That's a massive increase. But when you compare it to the kind of gains that you can see on tech companies, like we already looked at Amazon, let's look at Google. You can see we started trading at 47 in 2004. That's a lot more recent than 1988, and now we're at $2,800. If you look at Microsoft, another tech company, although they do sell desktops, they do a lot of online stuff with Xbox and Microsoft Store and their phones. So you can see they were trading around 60 something cents, maybe 70 cents, 47 cents at their lows almost. And now they're trading around $299, almost $300. We can look at another one, Facebook. Started trading, I think, in 2012 2012 was their first year. And they started around $40. Now they're trading around 347, and that's only in the past 9 years, since we're in 2021 right now. So you can see these tech companies have absolutely massive gains, and it's not to say that companies like JP Morgan don't, right? Look at JP Morgan trading around $9.98, around $10. Now they're trading around 160. So yeah, 16x. But that's pretty much nothing compared to what we've seen with those tech companies like Google, even. Looks like this, if it was trading at $50 and now it's at 2,800, that's about over a 50x gain in the stock price in a much shorter time frame, right? This is only tracking since 2004. So my point is with this, that tech companies, especially the newer companies that are coming out now involved in already very profitable industries, finance industries, right? That's a huge moneymaker. They really have the potential to become massive players. And SoFi is currently valued at 13 billion. And I think that it has the potential to grow much more rapidly than a lot of these more traditional financial institutions that are held down by their physical retail locations. Now, obviously, I'm not delving too deep into the numbers. I don't want to bore you guys with their earnings and stuff like that, because that kind of stuff really does change so rapidly quarter to quarter. And I may cover it in another video. I do know a bit about their earnings and their projected earnings growth. And analysts have actually touched on that. If you actually look at analysts' predictions for SoFi, you can see right here the target price that they have right now is the average target price, at least, is $23 for the stock, which I believe the way target prices work is they typically are aiming for what's going to happen a year out. So if you look at SoFi, where we currently are at $17, analysts are guesstimating that in about a year we'll be at 23 on average, right? Some analysts are more bullish than others, but that would even alone be a fairly significant gain in price. Now, I do think at that point we would be touching upon this support and resistance level right here that we've seen in the past. 23 seems to be somewhat significant for them, for SoFi at least. And I think that, obviously there could be short-term volatility with this stock. It looks like we are on the verge of either breaking this current resistance level at 17 or, potentially bouncing down below it. We'll have to see with that. But my point about this is that I want to become a long-term investor in SoFi, right? I don't necessarily want to be trading this. Maybe I would take some trades as I got to know the stock more, but this is definitely a stock that I've been looking into over the past while and has just become more and more attractive to me the more that I've figured out about what they do and the potential growth prospects that they have. So I will definitely be becoming a long-term investor in this stock, looking to just buy and hold over the next 10 to 20 years. And I really think that this could be a mega growth stock that we've seen, with like Amazon or Google or Microsoft or Facebook, because they're really doing what a lot of these big financial institutions are doing, but online. It's easier, it's cheaper, and it's more accessible since it's just online. They don't have to worry about the physical locations. There's nothing you have to do in person with them. And that's really the way that the world has kind of been moving, especially during COVID. So that's what I have for you guys on SoFi stock. That's what I think about it. That's my opinion. It's not financial advice. I'm not telling you to invest in it one way or the other. I actually haven't even bought my position in it yet, right? I'm probably going to be doing that later today. I have it on my to-do list, but I just finished doing the last of the research that I intended on before actually placing a position on it. And I decided I would make a video, share what I found with you guys. And, that's what I have for you on SoFi. So, you can get in potentially even before me. Now, that's all I really have for you guys on this stock. And other than that, have a great day, guys. I'll see you in the next one. Bye.